In 2018, Government of Uganda adopted a policy that requires it to borrow up to 1% of GDP on average per financial year from the domestic financial market. However, the increasing development in financing requirements in the recent years have resulted in an increase in domestic borrowing relative to the country's GDP above the set maximum.
Me, I'm tired of borrowing, by the way, let me tell you the truth. I'm very tired of borrowing. We must look for different ways on how we can raise funds to develop Uganda apart from borrowing. The implementation of this financing plan is a priority for government. I therefore urge every Ugandan individual, development partner, private sector player, ministry, department and the agency to peruse the strategy so that you can participate in financing for development of our country, Uganda.
This has prompted the launch of the Public Investment Financing Strategy, which seeks to establish robust and sustainable financing mechanisms for government programs from domestic and external options.
Looking at also other key accelerators for financing for development in Uganda. Tourism has been mentioned by PSFU this morning. Another very important area of work again, and this has also been mentioned, is in the area of trade. Positioning Uganda as a fast mover in the implementation of the Africa Continental Free Trade Area. And the government of Uganda and UNDP launched the SMEs for Trade initiative to unlock potential of the AFCFTA in Uganda.
The approach also provides a platform for collaborations between government and the private sector.
So basically, the development partners remain committed to support the governmental institutions led by the Ministry of Finance, Planning, Economic Development.
The Public Investment Financing Strategy comes at a time when the growth of global economies is constrained and thus resulting in huge budgetary deficit and the need to borrow more to bridge the gap.